Well, hello members. LA here. It is January 18th, 2015. And we saw another down week on these markets last week. The numbers are here. Um, it was a weak showing again. Overall, Russell outperformed, but Russell's down just as much as the rest year to year. So it's not a good start to the year for sure. The fact that we sold down in front of what seems to be what everybody's waiting on, which is the ECB, could be taken as a positive or a negative, I guess, because even though we've sold down, Europe itself has rallied into the ECB news. Let's review the technical fundamental highlights. It's really about Europe. Europe's trading to new highs, either at new highs or at the old highs, in anticipation of QE. I mean, this is what everybody's looked at. The Swiss now have underscored that QE is probably coming. The ECB has reportedly outlined the program that they're going to unveil, and from what I can see in the readings I've been able to find, is that they're going to say each country's central bank can buy up to 25% of its sovereign debt. And it's going to be responsible for at least half of that risk that it holds. And I think this piece of it has been floated as the way to get around the German objections. In other words, Germany's going to buy Germany's debt. And Germany probably can live with buying its own debt and buy as much as it needs to or wants to, up to 25%. That's going to let the nations on the periphery that are having problems buy up to 25% of the debt, but they're going to be responsible for that debt. And I don't quite know how this is going to fly in terms of the buildup. This news source I saw was on Friday, so we'll probably see that start to get priced into the market in front of the ECB, and we'll see how that plays out. I suspect this is the news this week. This is what's going to move these markets up or down. I remember back in 2000, I think it was late 2010, like December, I was in front of it was a conference down in Texas and in Dallas. And I was thinking the markets were on the edge. They were going to pull back in a larger way. It was either 2010 or 2011. I think it was 2010. And it turned out that what happened was the ECB came out and did their first round of LTRO, and these markets rallied. And, we've been rallying ever since, basically. So, is this going to be the same situation where the ECB really puts these markets in a larger way, right, on a larger move to be upside? And I don't know the answer, and I'm sure that the market will signal that if in fact that's going to happen. So to me, that's the biggest thing coming this week. We saw continued losses domestically, as I talked about, but we did not, right? We did not result in a break of these swing point lows on the Dow Jones, the NDX, and the composite. And if I flip over to those, you can see here how they're lined up, multiple swing point lows here on the Dow, the same thing on the NASDAQ, and also on the NDX. Although the NDX did break one of the two here, went negative, but it held the other one. And we really didn't see much volume on Friday, surprisingly, with options expiration. So, when I look at these indexes, the fact that they held again says that, maybe they're going to hold them. And I think a lot of that has to do with what's happening on the weekly charts. We'll talk about that in a bit and look at those. In general, the earnings have been sold pretty much across the board. I've got some details down below, and we'll look at that. And then oil rose for the first time in months on a weekly basis, and that looks to me like the energy stocks are going to probably give a boost to these markets. The negatives, if we look at those, financials are a laggard now rather than a leader. And if we pop over and take a look at the sectors themselves, you can see how the financial sector has been sold off now. Breaks the swing point low. It's hanging down here. A lot of volume as it comes into this high volume off the October lows. Not quite enough to break it down. That flips it around. It's going to come back probably and do a retest regen off this swing point low. Now, recognize that is a very large, wide bar. And if we get a boost on the ECB, we could see this thing trade all the way back to the top. But I do think that financials are going to be a drag on this market going forward as a result of what has happened here. If we look at it on the weekly, the low here, 23.31, goes into it, back over it, closes over it, has a bit more volume though. I suspect that's telling us that it's probably going to break this before it's over, and that these financials are going to be laggards in the coming quarter. Bonds, dollar, these things will not give it up. It's and that's with the currency market, huge moves being made in the currency markets off the Swiss news. Let me turn to the Switzerland market to start with. Here's the result of the Swiss, attack, depegging off the euro, saying, hey, we're not going to sit there and keep our currency weak in line with the euro anymore. Everyone has pretty much said, okay, that pretty much seals the deal on the ECB devaluing the euro more, and the fact that the Swiss franc is going to be allowed to float versus being pegged to the euro has kind of changed that whole equation and underscored that idea. If we look over with the euro, with the franc getting strong, that really wasn't able to stop the onslaught of the UUP. This thing, even though we're getting long tails, it still so far has not given it up. And the other thing that hasn't given it up is the bonds. The bonds just keep rising. They're up here at the high still, and if you look at both of these on weekly basis, here's the TLT on the weekly basis, and we look back at the UUP on a weekly basis, they still aren't showing tops on the weekly time frames. So, to that point, that's kind of a negative. It's saying that there's still fear out here, and that continues to be bought rather than sold, those two areas. The other one that kind of dovetails with this is that if you look at the sectors, the sectors that continue to be strong are the safety sectors. XLP, of which we actually have a position in, continues to hover at the highs. XLU tried to sell down and now is coming back up to test the highs. XLV, which is also more or less safety, also hanging up here in this higher range. So the safety sectors keep telling us that money doesn't want to leave the market, but it wants to rotate to something that's safe. The positives is what we just talked about a while ago, and in particular, we didn't see the Dow Jones or the NDX or the NASDAQ composite in general breakdown, but what we also saw was we saw the S&P 500 get back inside this December 18 bar. And I honestly didn't think it would do it, but here it is again off Friday's move back up inside the bar. If that holds on Tuesday, of course we're off tomorrow with Martin Luther King, if that holds on Tuesday, it looks to me like this thing's going to try to bounce into the ECB news and not give up this range. And so that's, if you're a bullish on the markets, that's a positive. Technically, intermediate term strength really is what's holding these markets up. And I want to kind of show you what I'm talking about there. I'm going to go back to the S&P 500 and pull up the weeklies and look at the weeklies. Here's the S&P, trades into it. Now it has just as much volume, but so far the weekly is holding. If I look at the other indexes, it's the same story. For example, the Dow Jones coming back into this high, still holding. If we look at even like say the NASDAQ composite, it's the same thing, coming back into these highs, still holding. It's the weekly strength that is keeping these markets up here, and I believe that really is the story right now, is that on a longer term perspective, these markets don't want to break down, and they're all in bullish formations. And let me just pop through, and I'm going to take the daily off and just look at the weeklies. Let me just pop through and show you how these weeklies aren't giving it up, certainly not on the IBB, but even here, this is the ITB. This one barely gave it up. This is the worst one. So the low on that prior swing point high, 25.13, closes at 25.10, so just under it, big volume. That's one of the worst cases that you see. But here, let's just look at some of these others. ITB, just like we saw in the indexes, holding at the prior swing point or the prior high. Here's another swing point high, SOX, still holding. Even in some of the sectors been decimated. They're ugly, but they're still holding. Here's the XLB coming into the high of the low bar, which has the high volume on it, comes into it, has nothing, bounces right out of there. XLE, which we'll touch on in a minute, that one got under, back over on the swing, on the lows, and holds. The XLF we talked about, this one has broken down on the daily, but look at the weekly, still holding. XLI still holding on the weeklies, right into this swing point high. So over and over and over, it's the weeklies that is holding this market up. The intermediate term time frame still looks, well, I shouldn't say looks bullish. It's unwilling to give up its bullish bias so far. And with the calendar as it is, with the ECB this week, you know, we're going to find out whether this just was another short-term, you know, pullback on a weekly basis into what has turned out to be the retest regen zones that are holding pretty much across the board. So that's that point. That to me is a positive. And then the other thing I just talked about, energy sector has pulled back. And let me show you, as far as the energy sector, let me show you one other thing here that is interesting on this chart. Let me pull up the XLE. Is that if you look at this and you think about how far can it bounce, you know, this is actually it wasn't the XLE. I wanted to talk about the USO. Let me go to the USO. If I look at the USO and I say, okay, how far can this bounce if it does, and it does look like it wants to bounce. If you take the prior swing point low, it should fail coming into that area. That's 2053. We're sitting at 1850. Right? This thing can move $3 and excuse me, $2 and just get into that area, right, where it should fail. $2 on this is more than 10%. So we can move anywhere from 7 to 10% pretty easy, or 8 to 10% is what I thought, with just a bounce, right? That's probably going to fail. That, if it happens, of course, is going to allow the XLE, which has now showed us a bottom, right? Gets under this bottom, trades under it, has less volume, comes off of it. That can move the XLE back up here to 78 to 80. So I believe you're going to see the XLE begin to support this market. That's going to take some of that fear that we were just talking about. It's going to take some of the fear out of the market, because a lot of the fear is associated with this energy, you know, skydive. So that to me is a positive on the technical side. Fundamental side, let's look at these. You know, continued talk, the Fed's not going to be able to raise interest rates. I don't know that this is that strong, but we got the Fed next week, so we'll see some more, you know, positioning in front of the Fed actually telling us what it's thinking. I'm sure we'll see some of that this week, and a lot of that will come off of what the ECB does. And what I just said, you know, the expectations is for full-blown QE. And if in fact that's what we see, and if it's big enough, that's probably going to move these markets higher. And that's despite a lot of anticipation of that in front of the news. Energy markets, they look ready to bounce, which we were just talking about. And if we look at on the negative side, earnings have to be a huge disappointment at this point. we've seen almost everything sold despite the earnings being chopped down like they always are. They're still disappointing. And most of the data that we look at on the economic side just continues to echo, weakness, some strength, some weakness, and the Beige Book was a good piece of that, and now we're starting to see layoffs in the oil sector, so those are fundamentally negative. If I had to look and say, okay, what am I going to watch for this week, it really has to be ECB and then earnings. Mostly ECB. I suspect that if they don't show us at least $1 trillion in euros, in terms of the size of this program they're going to roll out, that this market's probably not going to take it as a positive. We've seen in all of pretty much all, I wouldn't say all, but pretty much all of the European markets, we've seen strength in front of this news. Here's the CACs, the French CACs, going up for the highs. The DAX already over the highs, right? Even London is pushing back towards the highs, and they're greatly affected by the commodities. But in market after market in Europe, there's great anticipation of this ECB action, and if that disappoints, if it's not as big as it looks like it may be, surely that's going to hurt. I wouldn't say surely, but it appears that that's going to hurt near term, and that it's going to be more of a sell the news versus buy the news as a result of the anticipation of what's coming. If I look at last week's earnings, all these that I've highlighted, these were all disappointments and all sold off. Either they sold off in front of the news, which is what these did, or they sold off as a result of the news. There were only, out of all of these, there were only about 6 reports. SLB was a dead cat bounce. Intel basically held steady. BlackRock did the same. Same here and same there. They didn't rally, they just didn't sell off more. So earnings have to be a disappointment, and you're going to see a lot of earnings this week. The next 3 weeks are the big part of the earnings season, and you're going to see it spread out now. Retail, tech, airlines, mining, brokers, more financials, the drugs, J&J, so forth. This is going to be a big week on earnings, but of course the big news is going to be out of the ECB. So those are the drivers. This is what's going to move this market this week. If I look at the economics, of course, it's ECB and the FOMC next week. And then there's some scattering of industrial numbers and some more manufacturing reports, the PMI. But, of course, ECB is going to be the big news this week. Geopolitically, all this terror violence keeps picking up across Europe in particular. And then we're starting to see Russia and the Ukraine. I keep seeing more and more reports coming out of there of issues with more intervention from Russia in Ukraine. And as I've said before, as the oil situation gets worse, as we move on down through the year here, if that happens, I think that Russia story is going to be a big story, because they have to, it's hitting Russia hard, and they're going to have to take the attention, the negative attention, and rally it around the flag, which is usually what happens in these kinds of situations. Bottom line, we have been mostly in a watch and wait mode, as you know, holding some long exposure, but really waiting for some confirmation. We still haven't gotten that. I thought we would get it last week off the earnings, and we got negative earnings, and they did try to break down, but the expectation of what's going to happen with ECB has held it up. And as I showed you, those weekly charts have held up. So it appears to me that we're probably going to see this market, we're off Monday, ECB's on Thursday. The fact that we didn't break down Friday, which I thought we would, right? I thought we were going to break on the shorter term time frames, and we didn't, seems to suggest that these markets are going to hold in there for the ECB, and that's going to be the make or break this week. And so that's kind of the bottom line in my thought. That's where we're at probably. If the ECB does what everybody expects, and that number is $1 trillion or more, then these markets can even rally higher. It's the lottery ticket. and that's where everything is right now. Looking at the portfolios, really didn't do anything. I was thinking 4 areas that I wanted to concentrate on. The last, say, couple of weeks we were talking about it, and that was to look at housing, to look at gold stocks, to look at China, and to look at the consumer durables. Durables in China look okay, although China, of course, had already rallied a lot by the time we got in, so I suspect that's going to be very volatile. And it's also currency, so it's hard to get a good, currency neutral. There is no currency neutral Chinese investment, so that's an issue. But if the dollar pulls back some, that should help, and if China holds up or tries to rally more off the expectation that their central bank is going to keep easing, then we could see further movement higher in China. Housing market's a bust. Lennar, if we look at these 2 charts here, actually not that one, let me grab this one. If we look at the 2 earnings that came out, Lennar was out on Thursday, they got whacked, right? Just totally decimated. The other one that came out was KBH, and that was on Tuesday. They got whacked, something like 20%. They were down, 16% this day, down another 8% here, so they're down 25% in a very short period of time. That is telling us that this trade isn't going to work. And so what we have to do is look for an exit here while we still have it. Coming back into this big bar off the top, January 13 bar, bottom's 25.54. Need to sell into that spike. If this spike continues Monday, Tuesday, we've got to sell out, take a loss, but get out and cut our losses. Just missed the exit here by a few cents, unfortunately. So won't get as good an exit, but you have to exit. And if it looks like the trade you put on isn't working, then you got to do something different. You don't want to sit there and hope. And so the thing different here is just exit it and take a lesser drawdown. We're down about 0.25%. Market's down about 2% so far, and that's mostly the fact that we've got some stocks that are holding up well, and we're not but lightly invested. ASHR really didn't do anything last week. We actually got rid of IWM. Overall, made a profit. Got rid of Apple, and that's just we're in trading positions that aren't performing, and we're coming into earnings. Apple, I don't want to hold it into earnings. IWM. The market in general is struggling here, so we might as well book some of those gains while we can, just in case ECB disappoints. If it goes the other way, then you have to, move back into things, and I think what you do is you move back into things like we've shown that actually have some potential on the upside, and I'll show you these here in a second. Those are post-earnings trades. I mentioned them in the morning broadcast on Friday. You can go back. There's a link here. You can go back and look at that broadcast if you want. But those are the types of things we should be thinking about. When the general market is struggling, go to the strong stuff. Stay out of everything weak as best you can. So ITB, I just showed you. Asher, that one's really just a play on China. XLP, we already looked at. ILM, this is another one that disappointed. They came out, gave us an earnings warning basically here. They're bouncing back up. That's because the sector's strong. This doesn't want to break down. Again, we should exit this, not stay in it and hope. Elsewhere, NXPI got pulled in by the general market weakness. AWK is strong as a result of utilities. ZLTQ come out and told us that they're going to raise their earnings, and so they're probably going to get a boost higher. Let's look at them right quick. They're almost at the $30 mark. That's kind of the make or break round number. Looks to me like they're going to break through it. 34 is the target if they do. And then finally, looking at the last one here is Facebook. Facebook has sold down, broke multiple swing points. This is not a good looking scene. You got an ABCD structure to the downside. You got earnings coming out as well. So the question is do you ride this into earnings on a on a not a nasty chart, but the potential to break even more swing points, or do you hold? And we should try to take some of this out if possible on a bounce up into this area. Now that's not going to be a terrible loss if we do that. The last buy that we had here was at 76. Our original buy was at 62. So I would think removing that exposure, just holding on to the 62 price point that we have, and then seeing how this trades down, if it does, and potentially pick it up at a lower price. So that's the way the portfolio looks. In general, if we go back to the overall idea here, markets have sold down to start the year. It's not the end of the world. It's also not, a great start. The weeklies continue to hold on. Everything looks to be riding on the ECB now. Earnings in general, unless they really change the tone this week, they're not going. This is going to be the first earnings season since 2011 where earnings are going to be sold, not bought. And that says that the only way, more than likely, the only way we see further gains is if the lottery ticket that is the ECB turns out to be a winner. And that's a lot. That's a lot. That's a lot to hope for. It can happen. We've seen, this whole run has been in central banks one after another. I mean, just look back. China, Japan, the U.S., ECB at one point, now ECB again. That's what's driven this market. If they come through, if they offer this huge package, and if the central banks within each of the countries, if the package lays out that way, if they start buying sovereign debt, you're going to see these markets move higher again if that size of that program is big. And so that's really what it's all about at this point. You can't assume they're not going to do it. At the same time, we need to see them do it in order to make a move higher, and in order for us to adjust our portfolio in that direction. Until then, you gotta be prudent, stay safe, lean that way, and wait. That's where we're at, and that's where we've been at and still are at, and I suspect we'll get an answer fairly soon. Hope that helps. As always, if I can help you, drop me an email and I will. I'm LA. This is and was the weekly review, and we'll leave it there and pick it up as this week gets started again. Take care and thanks.